Hey everyone, thank you so much for tuning in. This is our weekly Precision Markets office hours with your Precision Markets coach, Brian. We host these every Tuesday located at 12 o'clock p.m. Pacific Standard Time. And we do this so that we can be able to discuss anything that you need to trading-wise, whether it be showing charts of different setups, analysis, whether it be going over different concepts or just whatever kind of questions that you come. For those, if this is your first time being in our office hours, our format is usually we will allow you to ask questions inside the chat. Once you ask your questions, I'll answer them in the order that they come. When it's your time for your question, feel free to come off mute if you want to be able to, if you want to speak or share additional context. But I'll answer the questions in the order that we receive. And so with that, I'll go ahead and begin and let everybody start asking away, and we'll get this party started. Anybody have any trades they want to show, any charts they want to share, analysis they want us to go over, any kind of concepts that you're needing help with, anything that we can do to be able to help you, anything question-wise, feel free to ask. How's everyone been faring with the price action that we've had the last 2 days? Are y'all making it out okay? Don't be shy, guys. There's no such thing as a bad question.
Hi there. Hi. Okay. I have a question. I would like to ask about the opinion of GU right now.
If I understood you correctly, you wanted to know. You said you would ask about the opinion of GU right now?
Yeah.
Okay.
Because I wonder, it's like news pushing or something like that. I saw a choke on the fall hedge. Are we expecting trend change right now?
Let's go take a look at it then. Give me 1 second, guys. Let me know if you can see my screen whenever it pops up. Okay. Can y'all see my screen?
Yep, I see it.
All right, cool. Let me go to the 4 hour. All right. So let's wait for a second for market structure to pop up. So let's talk about what we see from a market structure perspective. Price ended up making a drop from a lower high to a lower low, consolidate a little bit, made a new lower high, and then it dropped down to make a lower low. So now what's happened? Price broke through our last lower high. Like you said, it made a chalk. So we have a chalk. So now our trend is unconfirmed bullish, because once another 2 candles print, this will be a higher high. So now, also looking at this from another perspective, right now this candle hasn't finished. We still got about 2 hours to go until it finishes. If this candle doesn't close below this line right here, then what ends up happening is, where's my, what's it called, lines? I did. Oh, there it is. Break. Okay. I do not have my line set up. Anyways, well, until it crosses over this line that's in orange, as long as the candle doesn't come below here, even a wick, that's going to leave an imbalance. So what that means for us is that we have a lot of bullish momentum. Now, we got some news that are upcoming. We got Fed speaking tonight. We have tomorrow looks like some news during the beginning of the New York session. We have the Jackson Hole Symposium, which is going to happen on tomorrow night, starting tomorrow night. GDP, which is a big report on the rate of the economy. It's very important. That's going to be very telltale if the United States is in a recession or not. And it's forecasted to be going down. So these are all factors that could make the dollar weaker from a fundamentals perspective. But from a technical perspective, this right here would be a 4-hour demand zone. Follow me so far?
Yep, I got you.
So right now, from the price action standpoint, we could have two things happen, right? We could have price come into here and then go ahead and reject off and go and break off, and then turns into a potential higher low. So what we do is sell until we get into the zone, look to see if we see a M15, M10 chalk, and then we look for buys if we have order flow that shows us, and we expect for this high to be a weak high, and we expect for the low to be strong. Does that make sense?
Yeah.
So
Okay.
that's one scenario of what could happen. The other scenario is that we end up having a weak low, even though it was strong. So this would be a strong low, but the high ends up becoming a strong high, and it goes through the zone, and we go from a higher high to continue to a lower low, and then we might get maybe some ranging price action, or we get a further continuation of our downtrend. So that's another thing that could happen. But in the short term perspective, we do know this will be a higher high. It's going to be whenever it finishes like meeting our standards, because it's already past the last low. So we're looking to seeing price come into this area. We look to see what kind of reaction we get in this area, and then we take trades based upon that. But this could be a bottom for GU. Going just a little bit higher. Let's see what we get. So we're going to go up to the weekly time frame, and on the weekly, just to pay attention to something that's important, we've been in a weekly demand zone for quite a while. So this is a weekly demand zone, and we made a lower high to a lower low to a higher high from a demand zone perspective on the weekly. Make sense?
Yeah.
So from a weekly perspective, we're expecting for price to find some type of bottom and then go up to here. So what needs to happen is on the 4-hour, where this price goes in a straight line going up, on the 4-hour, that looks like an uptrend to us. So I'll show you to perspective. From this higher high to this spot where it's low right here, I'm just going to draw a straight line, right? If you go look on the 4-hour, what was the trend? Well, you can't see that far back, but get rid of some stuff. There we go. All right. So here you might see higher high, a little movement up, but it ultimately ends up going down. You see lower high, lower lows, a little bit higher high, lower high, lower lows. It goes up for a little bit and taps into the zone, and it comes back down with some force, right? So ultimately, you can see that the trend mostly kind of came down, most part. It made some pullbacks, but then it mostly came down until it got into this demand zone. So we're in a weekly demand zone. From a 4-hour perspective, we just completed a chalk reversal. This could be a low for GU. It could be continuing to go up, and this will give you a nice little trend that you could ride, because it took from February of 2022 to get all the way down to here. So this could probably mean from August or September of 2022 until 2023, we could be looking at an overall weekly uptrend or bias, but more than likely GU going uptrend, mostly coming down pullbacks, but overall going bullish. Does that make sense?
Yes. Brian, I have another question. It's like when we're going to this lower time frame, we could actually see a lot of inducements. Like first M1 choke is being an inducement, and then the second one, it really drives the bias direction, the direction. So when we're looking into hatch 4 and we have this kind of choke, can we actually implement that logic into hash flow also? So it's like, it means that probably hash flow has it could occur a lot of choke inside here before it really drives the price up.
Well, I mean, everything is pretty much fractal, right? So anything that happens on one time frame, you can apply to another. That's how it should work in the market. But there's some things like everything's pretty much smoother on the higher time frames because one, it takes a lot more money to make those movements than it does take on an M1. To make, for instance, a candle like this within what was probably going to close within balance, that takes a lot of money. Just to move the market 1 pip, I think it takes about anywhere from 10 million, 100 million, or even $1 billion, depending at the time of day of volatility. So if the market makes a move, let's see how many pips this is. The market moves 115 pips. That's a very intentional moves. Likely the fake outs and things that you see that where they go into take an inducement, maybe not so much on the 4 hour, because if, for instance, won't have to go in and tap in 2 or 3 times into a spot. It may or it may not. But I mean, you can apply it. But the biggest thing that I would tell you is you really have to back test it and see how often do you see that. Because I wouldn't tell you that anything blindly applied. I'm not a person who trades liquidity and inducement. So I'm not going to be the best kind of coach to explain those things for you. That would be something more in the expertise of like Peachy or InfoJet or Nathan or Rob. But I will say, for instance, price goes into certain levels and they're resting orders, right? So we know when they make an imbalance like this, the way that banks work is that they make a move that goes up. This is the blueprint is the imbalance. When it comes back in, they either close out some orders that they had because they can't place all of their orders at once, which ends up looking to a lot of other people like inducement. So like right here, for instance, you might say that this candle right here might be inducement, this bearish candle. So price will come right down here, take this inducement, and then go off after it's wiped whatever liquidity that it needs to. I look at it also as, for instance, price coming back into a zone, it needs to mitigate that zone. So you could see it, and it could see it even on the 4 hour. But a lot of times when they make their moves, it may happen one time or even not even twice, because it takes a lot of money to make movements on these higher time frames. Does that make sense?
Yeah. Brian, if you are saying that you're not a liquidity conceptual like trader, what do you consider yourself as what kind of trader? Like what is a phrase to describe you? If let's say you're talking that you don't really trade liquidity, is it?
Well, we all trade the same, but it just depends on what concepts you use heavily in the most. So like, for instance, some people may use, for instance, the concept of liquidity of inducement. I don't use it. We all use market structure. We all use supply and demand.
Okay.
We all trade what would be considered a price action based strategy, but the influence of what concepts and theories that we use is what just makes us a little bit different. So mine is primarily based upon market structure and supply and demand. And those are the two things or market structure, supply and demand, and momentum. So I rely heavily on reading candlesticks to give me a lot of insight as to what the market is doing. So I'm heavy on candlestick language, heavily on seeing momentum in the market before moves happen. And I'm heavy on structure and supply and demand. Whereas sometimes you might see, for instance, a trades that Rob might post or even Peachy might post, it might break market structure principles because they base it on liquidity or inducement principles. So it's not like a different style of trading. It's just more or less what common factors or theories that we use to heavily base our analysis on, if that makes sense.
Okay, got it. Thanks.
No problem. No problem at all.
Thank you.
Josiah, you had the right idea, but the missed price points on my limits. Yeah, man, I hate when that happens. That's the part of the reason why I take such big zones, because I hate for price action to be missing my area. That's why I do market execution. All right, let's see. He asked, do you take trades off demands or supplies that haven't broken anything? Like, do you trade the reactions off them? No, I definitely wouldn't. So, I mean, the thing is, You can trade anything, right? Doesn't mean you're going to make money. So the question is always looking at, for instance, price and looking at things and seeing, all right, how do I take trades that are high probability? So if I said, let's say, for instance, before the day started, right? Let's see, this line right here was the opening of the market before London session. Now, what ended up happening before this candle started printing is that we had a supply for the H4. So before the day started, my bias would have been to be buying today on GU just from the fact that we were at a lower low and you can see prices moving sideways. So my overall bias would have been just like this, right? So if I'm coming down to the 15-minute time frame and looking past that line, I'm looking for wherever I can find a demand. So find a demand zone to take trades off of. Now, let's see, here's a low. Let's see if this meets. No, neither one of these meet my criteria. So as I start up my day, I've been looking for, this is the first thing I want to see go, right? All right, cool. And so eventually later on into the day, during the, right after here's my London open right here. So I'm gonna go ahead and label this. That's my London open. Price comes up. I wouldn't have been involved in these trades. So then price goes and it breaks the last supply zone because this was a supply on M15, right? So now we have a body closure break. That's the only thing I would have been looking for, like demand zone wise. And so I would look and say, for instance, okay, here might be a demand zone. I would look for price to take any type of trades off, right? And the reason why I say that is because this is where it chopped. Does that make sense? It chalked here. So that means that for this supply to be broken, there had to be a demand. Now, this is a demand zone. We also could consider the extreme of the leg right here, and this was another demand zone. So price coming into either of these two areas, these are where our high probability spots are. And so like one of the requirements I look for is it has to break something. Now I wanted to break a previous supply or previous demand zone, or it has to push through something. And so the trade would have hovered all day, but ultimately, hopefully, if you would have taken a trade somewhere in here and taken some kind of, some kind of stop, I mean, you could have looked to get a 10-hour trade somewhere through the day. But when you start taking trades off of zones that don't do anything, that's when you start seeing more or less your trades fail, right? So like, for instance, I'll give you an example. What if you had treated this little area right here, and let me delete this actually. What if you treat this as a demand zone, right? So did it break anything? No, it didn't. This was the last high, and it did absolutely nothing. But we're going to go down and just take a look and see what happens from a price action standpoint. So price comes down here, and instantly it goes straight through your zone. Even worse, let's say, for instance, you apply the concept of unmitigated zones, and you decide, all right, I'm going to set my limit for right here. And when price comes back to it, I'll take the trade. What would have ended up happening is you would have got tagged in for your trade, and you just would have gotten there and taken a loss before you even had a fighting chance. So that's part of the reason why you got to find zones that one break stuff. Now, luckily, this happened to all be in the area of a bigger demand zone, because the actual bigger demand zone was really this area right here, right? But now what I was trying to just prove a point is, don't just take demands because you see stuff, because you get results that work sometimes. This demand zone would have failed. If you were taking a trade off of this and considered this a demand zone, yeah, this would have worked out, but it's not going to work out every time. So you have to have like solid rules. And the solid rule of a supply and demand, one of the key components is it has to break something. Does that make sense, Cookie? I hope I said your name right, because I will butcher names. So let me know in the chat if that makes sense. Perfect. So yeah, like there are a couple of common rules that you need to have have for when it comes to picking out points of interest. Because remember, guys, it's not about getting trades right or wrong. You get excited when you get a trade right. You get it right for one day. You have to come back and do that the next day and the next day and the next day. And so what keeps you from not having fear of staying up at night, because now you start to feel performance imposter syndrome when performing and trading, that you have to have a set of rules that you can follow every day. So at the end of the day, if you make a winning trade and it goes against your rules, that's a loss. If you make a winning trade and it follows your rules, that's a win. If you make a loss and you followed your rules, that's not a loss. That just happens to be a result that you did not like. But you only lose when you break your rules, because the rules are the only thing consistent. You're going to have wins, you're going to have losses when it comes to trade. But when you don't think about trades as, oh, in the last 5 trades, I lost 3. You look at it as over the next 100, I'm going to win 85. That's because that's what you've seen statistically from what you've done. So following your rules is more important than calculating your wins and losses, because wins and losses are just randomized things. Your rules, that's the only thing that stays the same. And if they change, you get random results. So that's no, 7. Rules aren't made to be broken. Rules are made to be followed. And this only and only case only. So I say that to just kind of warp your mind, guys, especially if you may be struggling a little bit with trading. So definitely something to just keep in mind, guys. All right. Josiah, you're back. My boy Luca. Bit confused when it comes to higher time frame, like the daily, let's say. You see a chalk on the daily, are you suggesting it's more probable to see it's more unconfirmed or being confirmed in your future? All right, let's talk about that. So let me go ahead and erase my charts real quick, guys. We're going to back it up a little bit. So let's talk about higher time frames. And let's talk about what we see, right? I'll use the daily. All right, cool. So here, right? We end up seeing, like for a GU, we end up seeing price come down, and I always like the map structure first. Lower high, lower low body break, lower high because it didn't really go anywhere, and it breaks lower for it. Then it ends up making a potentially higher high, right? And it comes down, and now we're in this range. So when price ends up chalking like this, there's 2 things I like to look at. One, this is a potential demand zone, right? Because we recently have made, oh, there's my demand daily. We have recently made a higher high. So what happens is you have a couple scenarios. Price could do this, and then it could end up going from here and going past to take out this high, right? So that's one thing that it could do. It also can go completely down and break the most recent last demand zone that was created. And now what ends up happening is we treat this whole area up here as some sort of supply, right? But when it comes to like these chalks, you have to really monitor the reaction, right? So I'm just going to show it to you from right now from a daily perspective, Luca. Right now, this was the last supply zone. Right here, this lower high. The last significant supply zone. It's been broken, and it was broken by a demand zone, right? So the last thing we have to go off of is this demand zone. It's the most recent area. So for right now, my bias is to go from here and to go up from here. And this should be a weak high, and this should be a strong low, just simply because it's the last thing we have to go off of. Now, from a candlestick basis, Mozzie, like this is what I look at. We didn't close past the zone. We definitely wicked below it, but from this candle, we have another candle that has equal body strength and showing that it's going to possibly could be going up. If we get, for instance, another candle here, let's say, for instance, we get another blue candle. I can find the color blue. Oh, there we go. Let's say, for instance, we get one more candle here, and we get another candle with some similar body size. Try to go. Let's say we get another one of some similar body size. I can get this thing to copy. There we go. Like this, right? Well, at this point, I'm still going to have a bias that price came down here, and I'm really going to expect that price is going to take out this high. And so now from a targeting perspective, my overall target for any buy trades that I would have would be all the way up here, because I would be expecting for price to come out and take this. So this would be my target. So it's really kind of reading what we end up getting from a price standpoint, and also from a from like a supply and demand, and also to looking at what we get from a supply, demand, and market structure standpoint, if that makes sense. Does that make sense what we're looking at, Luca? Yeah. Now, that's just from a daily perspective. What I would look for is, like, say, for instance, I would go down to the 1 hour, right? Because remember, if we come to an M15 zone, we go to M1 to look for a chalk, and that usually means momentum is going up, right? So it's no difference on a higher time frame. You just go to a lower time frame that's a pair for it. So on a daily zone, I go to the 1 hour. So what am I looking for in the 1 hour? Well, I'm looking at the last 1 hour supply, which would be somewhere in this general region right here. This is the last 1 hour supply. And the reason why I say that is because it ended up breaking this low right here. So now we have a break of structure. One second, where did that thing go? So we have a break of structure here. Sorry, guys, I don't know why my thing's doing this today. Put it in the center. And then we also have right here, we have now a chalk from a 1 hour perspective. All right. So now also look at this. It didn't just break with anything. It broke with momentum. It broke with news. Yes, because news hit. That was the news home sales, which came in lower, which means the dollar's become weaker. But that's also momentum, right? So now the most recent zone we have is an hourly zone. We have this demand zone from an hour perspective. So now what I'm expecting to happen from a 1 hour perspective is I'm looking to see if price comes down in here. And if it does, I would look at maybe M5, even M1, see if we get a chalk. And then I would take a buy trade from here. And I would expect that this high is going to go. This is going to become a weak high. This will be a strong low. Price will come into this and take off. What will end up happening is, remember those candles I drew on the daily? That's how we get those daily candles that I was talking about. And so price will end up going and doing something pretty much like this if demand is going to go up from this daily. It's going to do this, and it's going to create nothing but demand zones. So that's how it's the same concept that you use, on the lower time frames. You just apply it to the higher time frames. And so all these would be demand zones that will be created. In the process, price will go up. And what this will look like on the daily is 2 daily candles or 3 daily candles and so on. Does that make sense?
Yeah, good.
Awesome. So that's what I'd be looking at on GU for the people who are trading GU. I'd just be watching this to see exactly what kind of things happen so much. Awesome. I got time for one more question from Josiah. He mentioned.
Brian, I have a question.
Oh, sure. Who's this?
Ignacio.
Oh, hey, friend. How's it going?
Good, and you?
Good.
I have a question in GU, this zone. Do you look for a discount zone? Or in this case, I look at this breaker block, the price and the price go to this zone and go up, or you look for a discount zone in this zone, and I think that this order block it's in a good zone. What do you think about this?
This would be the example of a breaker block. I don't really trade. I don't trade breaker blocks. I stopped about 4 months ago. Sometimes breaker blocks, they do work. I'm not gonna say that they don't. They're just not part of my trading plan because I think it's more high probability. So just from what I understand or have come to understand about banks is that when it moves with a zone and it moves within a balance like this, I've gotten away from doing like this one candle like this because sometimes price doesn't come into this refined zone and you have to look left. And so when I look left, I can see this clearly was a range. It goes back to a theory called rally-based rally. And so price rally, that's why you have this candle right here. And then you have what's it called? You have this range and then it rallies some more, which is you have this strong candle where it continues to take off at, right?
Yes.
So that's what I look for for picking up my zones. Sometimes it will come to this breaker block and the breaker block will take off. But I would put my money more on it coming into the place where it ranged before because banks obviously decided to generate liquidity. For me, this is liquidity to me. Banks don't need our orders. They really don't. They don't need to take us out. We only make up 3% of all transactions. So what's 3% of $100 million? That's $3 million. Do you think if they want to make $100 million order, they really would come back for 3%? I know I wouldn't because I would fire somebody who would do that. So what banks have to do is they can't just say, I'm going to drop 100,000 lots because if they dropped 100,000 lots, price would go from right here, it would go all the way up like this. They can't do that by law. They've done it before. There's a couple different times. There are a couple different times where it's happened, but in history, and it destroyed entire economies. So they have to put some orders in. They need price to come back. And when it comes back, that's whenever their algos or their limit orders or even manual executions go and they're placing the orders. And that's why price never moves in a straight line. Price has to go from point of making, has to go from making orders, come back, place more orders, come back, place more orders, come back like this. And generally before any move, I know Rob talked about the AMD cycle. There's always going to be a consolidation or what he calls accumulation before there's a large move. Price comes back to it. It mitigates by adding new orders or et cetera, or closing out whatever. We know that banks hedge. That's no secret. That's exactly just how banks work. So you might find sometimes they don't wait for price to come back to this level. Sometimes they take it from up here. But as long as you're within inside the imbalance, you're in a really good spot because that's a high probability area that there's going to be some more momentum to come one way or another. But what I found from the last couple months of testing and what's going to be in Precision 2.0 that we're really going to cover is picking better POIs because you don't want to pick every POI you see. You want to be selective because you only want the ones that have the highest probability. And I can guarantee you, go back and test it. And if you include imbalance into your criteria, it makes a difference in your results. It also allows you to hold trades longer. Because before I just stopped at 5R. Now I'll sometimes hold trades to 10R, 16R, 20R off of one trade because I just have that much more confidence in my POI because I know the direction. I get the direction right. If I get the POI right and the entry, I can hold the trade almost all day or a couple of days. So that's why I tend to pick these areas. I wouldn't pick that as much, but that's something that you should go test and see if, all right, out of 200 times, how many times did the breaker block fail? How many times did the breaker block work? And that really will give you an idea of, which word you should use.
Okay. Thanks, Brian.
No problem.
Bro, can I just ask like one quick question?
Sure.
You showed this break of demand on GU, right? On the M15. I usually like take the chart when it break the structure, right? But you are showing the break of demand. Is that correct? So is that more accurate to do, or?
I mean, so from here, what I picked here was the reason why I picked this one is because it was the last supply zone that we could find. And that was the first place. One of the things that we're going to discuss in 2.0 for 2.0 for precision markets is we got away from, all of us got away from mostly from like M15 structure, or like in this case, this would be H1 structure. We only look at structure on your higher time frames. That might be the 4 hour for some people, that might be the daily. But you'll even notice, even as I pull up my chart, I have my structure points pop up on the daily. Structure is going to pop up here on the 4 hour in Uno Momento once it starts processing. And then when you get anything below the 4 hour, I don't have structure pop up because I don't really need to know the structure. I only need to know what is the, where's my points of interest. Because the structure, like there's 3 things that y'all guys need to know when it comes to picking, for instance, when it comes to trading, right? These are the 3 things that are most important. And you've probably seen me post this multiple times in the chat. And then I'll put it here too. The most important thing that you need to have is direction. Like, if you don't get direction right, I don't care what else you do, it's a waste of time. Then the next thing you need to have is just point of interest, right? And then after that, the very last thing you need to do is entry. Now, I want you to notice something. The entry is small. We see way too many people post charts with, their entries and say, why'd I get this wrong? And half the time, y'all get it wrong because you don't even have the right direction, or you pull the wrong POIs. Like, the entry is what most people focus, and the reason why they fail at trading, because they don't take a higher influence. So when I start my day and I know, for instance, okay, we're in a demand zone from, I know 2 things. And Mozzie, this goes back to what I focus on. So this will explain kind of how I look at my day, right? I look at market structure. That's the first thing. We made a higher high after making a lower low. My expectation is that I have a bias for buys. I'm not taking any sell I see. I don't care how good it looks. It doesn't go against my bias. Secondly, from a supply and demand standpoint, we broke the last supply zone, which ended up being this lower high. And we made this demand zone. And now we're at this demand zone. Then also, I'm looking now to the 1 hour. So I've got my direction. My direction is I'm only buying. I don't care how tempting sales look. I don't care what kind of pullbacks we get. I just want to take what's in higher probability so I can make the most money. And so for me, it's now knowing, all right, if we're in a daily demand, I need to see some type of chalk on the 1 hour for me to be able to take this trade. I wouldn't have taken any trades today on GU because I just didn't have any kind of POI that met it. I didn't have a demand zone that was created until we ended up breaking H1 down here. You say something, J-Boy?
No, that's the same with me. I saw nothing.
Yeah, there's no trade. So I have direction. I had no POI today for me to take the trade. So I don't care about what the structure is. All I care about is that I want to see this supply broken because it's the very last supply for the day. And once that supply is broken, we have this demand. Now I can take any demand trades, any buys that I see because it's still following my direction. Going into tomorrow, has my bias changed? No, because nothing's changed on the market. We're still in this demand zone. Until we close with a body close at the end of this demand on the daily, all buys are still valid for me. It could take 3 days. It could be 4 days. It could be a week. I'm still going to keep taking buys. And that's why I kind of focus. I know Muncie asked earlier what makes me different from other traders. I just focus on those 2 things, supply and demand and market structure. Those 2 things tell me everything I need to know about making my decision. So now when price comes back into here, I'm going to be focused on taking buys, right? I'm going to be really adamant about taking whatever buy that I see that's somewhere in this region. Let's say, for instance, it comes down to here, right? And my target is going to be all the way up here. So I can literally hold this trade for that long, or I can close it. And as price ends up making demand, I can take trades off of every demand zone. Does that make sense?
Yeah.
Of course. No, it's just on that example you had showed, like with the M15. But definitely, I'm not using a M15 as a structure. It was just like to just the detail of like precise POY selection to where you were putting it into breaking the demand, where they're in that breaking the actual structure M15, which kind of makes a difference. But I got you, bro. No worries. That's what I'm doing anyways.
Awesome. Yeah, if you follow that, it's key, because like when we're in the zone, I want to see the last supply and demand break, not so much the structural break. Because if I had to wait for structure, I'd probably be waiting for somewhere up here. Even it a lot of times adds up to end up being what you would probably consider structure. Because if I had turned on structure, this would have been a low. This would have been a lower high on H1.
Yeah,
This would have been a lower low, and it goes and breaks, and this is now a higher high. So you wind up getting to the same place, because supply and demand and market structure are very similar, but it's just a little bit more added. It's a little bit different.
Yeah. Because then you would like keep selling on that point, because you'd be like, okay, it's still gonna break. I mean, yeah, okay, it's still gonna keep going down, but actually that's not what you're looking for at that point. Yeah. Gotcha.
Yep. So like I said, direction, I know from the daily I'm going up. From a POI, I'm only looking for the POIs that align to my daily direction. When it comes into that POI, then I'll actually go take a look for my entry and try to hope that I'm not on the other side of any J-boy trades. And as long as I'm not, then I have a chance of actually making my money for the day.
Is J-boy going to be the EA?
J-boy is the algo. J-boy is the term market.
Nah.
He doesn't want to tell y'all. He be scanning y'all's trades to see what to do opposite. Be very careful what you tell J-boy. But I got time for one more question, guys. Josiah. Yeah, it's going to be not really a big change. It's going to be more of an incremental change. There will be some big structural changes on some of the concepts and some of the things that you implement. Because what really the focus is there are a couple of new things that you'll learn that we've kind of been able to implement to our training that have improved the accuracy. So it'll build on some concepts. There's some things we'll move away. So one of the things that we'll move away, for instance, is going away from M15 structure. That's something that wasn't key. So that's just something to keep in mind. But I'll show you, Josiah, just two trades that I saw from EU from the last couple of days. So from yesterday up until today, my bias was that we were going down, right? So knowing that, I actually looked at an M15 chart. This this is my London Open. That's my London Open right there. So you don't have one London Open. I did. Nope, sure don't. Okay, so that's my London Open. And so price ended up making a supply zone here. I didn't really see what I really wanted from this supply, because my whole thing was, my target was price taking out this low, right? So where this low was, let me draw a line here. That was where I was focused on from a daily target perspective. I want to take trades going in that direction, because that was going to be a weak low. So going back to the M15 chart, price never generated and created such, it never came back to this zone, right? But in between here, we had price come up, and I treated this is about the only thing I would have seen. I don't even recommend it, but this could have been possibly used as a supply zone. The reason why is because it meets a pullback rule. And so you can't just take, like, for instance, right here, right? You see this bearish candle that I based this supply on? Sometimes I see y'all take trades where the wick and the lows just kind of run consistently. So this low is lower than that low. And then this low is lower than that low, this lower than that low. And even if it's a bullish candle, y'all take it, but that's not technically a pullback. So for instance, I'm trying to find a spot where it didn't have a pullback. Something like, of course they would have all pullbacks. Let me look. Okay. No, damn, I can't use that one either. Thanks for not showing me the, oh, no, I can't use that one either. Come on, got it. No. I love how all of the accurate examples show up on the chart today. When I literally saw one that wasn't. Is that it? Yes. All right, perfect. So this candle low is lower than that. This low is lower than the previous candle. 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 All these candles' lows are lower. I would see some of y'all pull a supply zone like this. This is not a supply zone because it never pulled back. It needs to pull back. So this low can't be as low as this low, or can't be lower than that low. That's not a valid supply zone. That's just a random doji in the middle of nowhere. That's why I say you can see dojis, you can see chalks, you can see all these concepts anywhere on the chart. Doesn't mean that they're all valid. So this one met the pullback rule, where the low of this candle wasn't as low as this candle, and then it broke. So now we technically have a candle that broke a previous lower candle. It's broke something. It meets the rules. Plus, this is actually an imbalanced candle because the wick of this candle only comes up to here, and then the wick of this candle only comes up to here. So technically, all that area is an imbalance. It's just hard to see. But I have an indicator for that, so it helps me see those things. This would have been about the only entry I would have seen. And I don't even like taking trades and consolidations like that because you never know what you're going to get. So price comes in, you get a tap in. This meets the pullback rule, even though it doesn't meet the like candle body close. So for those who take wicks, this would have been a chalk to y'all. For those who take body closes, this would have been a chalk to y'all. So one of these two spots, you're going to pull one of these two for a chalk, possibly. So what that means is now you're going to put your entry zone right here. You're going to take a J-boy entry, and then you're going to cover a little bit of your spread, and you're going to shoot for the moon and collect everybody's money from the trade. And so this trade could have gone on. We're going to this green line. Remember, that's where the daily dropped. And so this would have gone on for at least like a 1 to 14 R, 1 to 15. Could have kept even going past it, breaking it through. So, but it would have taken a little bit of a while. But that was like the one trade I saw. Yep, there it goes. Hit our
This morning. Okay.
This was yesterday.
Yesterday. Yeah. I
Thanks
think
for that tip.
Yeah.
Thanks for that tip, because I ain't even realized that with the supply and demand zone, where you was just talking about how if it go lower, then it's not valid no more. It's got to have like a pullback. I didn't even realize that. Appreciate that.
No problem. A lot of people don't, man. So it's that's the only way I would have even seen this, because looking at this is just a collection of candles. But this was only a break lower. It's an imbalance. Those are the two things. Those are two of my rules when it comes to picking a POI. I don't usually recommend this, but I don't recommend usually getting in consolidations because you don't know. They try to fake you out first. But, you know, some people try to get early buys, may have gotten wiped or stuff like that. But you see, this would have gone on and boom, it would have broken. So then after reaching the bottom today, let me get to today, guys. Okay, so now we got to today. This is today. Let me get to my London session real quick. London is right here. Okay, so now, I mean, you could have still held the trade if you wanted to. You could have held it into this morning. That would have been 27R right there. And that's just one trade. Do you have a second entry to get in there? No. Oh, this met the pullback rule. but it would have never would have came back. So it body closed after this candle, so it never touched in. But after it passed that daily, after it got to go to that daily, I would have been looking now and say, all right, I'm going to look to see if I could possibly buy. So now we get down here, right? This candle meets the pullback rule. On the 15 minutes, you don't see anything, right? But on the, I'm gonna go to the 10-minute chart. It's a little bit clear. There's bullish candles. So this was another supply zone. So it broke something. So this is all supply, right? Now we're at the London session this morning. Price ended up breaking right through that. So now this supply has been taken. And now what we have is a demand. So all of this area, to me, is a demand zone. So price comes into it. And I saw a lot of people taking sells. I had initially sell buy.
Never.
See this and this on it. So price comes into here. Let's see if we get it. We get, here was the last like supply that needed to be broken from a 1 minute perspective. So here we have a supply on one. Okay. And so here, that didn't make the way pullback rule, but you had price come back and tap into, I think, this demand zone later on. So I'm gonna let price play a little bit. All right, price goes in, boom, it went through it. If you would have taken this, you probably would have taken a loss. All right, cool. What we have here is we have yet another pullback, right? Here's another supply. So now I need to find supply breaking this. All right, we don't close. All right, we close above it, boom. So life is good, right? We got a couple of different areas you can choose from. We got this one met the rule. So here's another demand. We got this other one here. I'm just gonna take this whole little range because I don't.
Yeah.
I'm not gonna. When I take those small candles, it works sometimes. Other times it doesn't, because the most important thing, like I said, is direction. It's not the size of your POI. So I don't do limit orders. So more than likely I wouldn't have taken this trade, but some people may have. Let's say, for instance, that you did. And let's say, for instance, you got involved here.
That would have been a loss.
I think that's what I thought. I couldn't remember exactly, but I would have broken. Hopefully, would have broken even right here. If it doesn't go back, yeah. Well, at that point, you definitely broken even if you pulled your break even. Even if you kept your stop open, I don't know. Let's see what happens. Because eventually, it's going to tap into that bottom demand.
Oh, there's a liquidity.
And this is what happens when you get stuck in a range. It's just ranging. Dangerous place to be. But we'll just keep on playing with the game. Okay.
Now we have a chop. Yeah, that's the right entry now.
It taps.
Hey, I got a quick
right?
question about the pullback rule.
Oh, sure, go ahead.
If you got two, if both of the wicks are like the same length, does that still count as a pullback, like for a demand or a supply, or does it have to be lower or
has
higher?
To be lower or higher. Can't be equals. Okay. If it's equals, then that's the problem. So this would have been the intro I've been looking for. I don't do limit orders, so I wouldn't have taken this loss because I look for a certain candlestick rejection. But I'm basing this on limits because I know a lot of y'all take limits. So if we would have had this loss, would have been broken even here, and then we would have tapped in here, and this one goes, I think.
Yeah, it goes.
Yeah, it goes. You even had news to help you. Now, target-wise, knowing where we're at, honestly, you could hold this trade all the way to this week high, which is going to be right here. That could be your daily target. Now, I definitely recommend you taking partials, but let's look at a more intermediate target, right? From an intermediate target standpoint, I'm looking at the H1. This would have been a target, and this would be a target right here. So I would have been looking for a trade for maybe a 1 to 20 R. And because the most important thing, guys, I only took the only focus has been one trade, but the focus is getting the direction right? So the whole reason why I even thought about that is because one, we broke this low. I'm thinking that price is going to go up. I wait until I got my 15-minute chalk, right? This supply was broken. This demand was broken. It was broken with imbalance, and it broke a previous high because it followed the pullback rule, right? So I could be able to call this a supply. So now knowing all those two things, price comes into it, it eventually goes and gives me a strong reaction. Now I can hold my trade with confidence knowing that I'm going in the right direction. So it doesn't matter if I would have extended my stop. I could have doubled my stop size. That's still a 110. Like, it really doesn't matter how big your stop is. It matters how correct you are at analyzing the direction of the market. And price would have gone on and hit 20R, just like that. Does that make sense, Josiah?
Yeah, always.
Yeah, that makes sense.
Awesome. All right, guys. I gave y'all some extra dosage today. I appreciate y'all with the questions. Don't forget, guys, on Thursday, we're going to have our Power Hour call with Rob. And so it'll be at the same time, 12 p.m. Pacific Standard Time. If you had a question that you didn't think of, that you couldn't get answered, don't forget you can ask within inside the questions, or you can save it to Thursday's call. Or guys, don't forget, all the coaches, we do one-on-one coaching. So we'll give you a dedicated hour of our time. We'll break down all of our strategies. We'll break down anything that you're struggling with. I highly recommend that you do that. I also highly recommend that you sign up for backtesting and be a backtester, because it's every person that I've seen go through it, they come out of it, and within months, like, their trading just transforms like enormously. They stop making as many mistakes because it's a really good lesson to help you to understand what you see in the market on a daily basis. Getting feedback from Rob, Nathan, or myself, and some our student leads on what we see and others to see. I mean, like, it's a really, really thing to help you in your development. We want to help you, especially if we can share a lot of the stuff in our one-on-ones that we learned from the 2.0. Like, there are things that I can only begin to tell you in these office hours that I could spend a whole hour on explaining the concept for you in a way that break it down for you to understand. So if you want to sign up for backtesting, reach out to me, let me know, let Rob know, let Nathan know, let any of the coaches know. Because we'd love to have you sign up for the next couple of weeks, guys. Like, this is what the stuff that you do that helps you to become that consistent trader. Because I want everybody in here to be a millionaire trader. Hell, even eight figures and 9 figures. Because once you learn this system and you get the system locked down, it does not matter what kind of money that you trade from. You can turn anything to anything. $100 to 1,000 is no different from $1 million to 10. It's no different from 100,000 to $1 million. I just want y'all to get down this so that y'all can be able to master this. So let us know how we can help. Definitely sign for backtesting. Let us know. You want to do one-on-one coaching with me? Let me know. Let the coaches know. We're here to help you guys. All right. So I will catch y'all in Discord, and I will chat with y'all a little bit later. All right.
All right.
Thank you. Bye, everyone.
Thank you.